and welcome to GreenBiz Studio. I'm Grant Harrison, Director for Sustainable Finance and ESG here at GreenBiz Group, and I'm excited to be speaking today with Emmanuelle Palikuca, Managing Director and Head of Sustainability Advisory at Alliance Advisors. Emmanuelle, it's a pleasure to have you with us.
Yeah, thank you so much for having me, Grant.
So to start, tell us a little bit about where Alliance Advisors fits into this ever-growing ESG ecosystem and maybe what you're most focused on in this new, or I guess now new-ish year of 2024.
Yeah, absolutely. So Alliance Advisors is a global investor intelligence, shareholder engagement, and corporate advisory firm. We support companies across the globe and across industries to achieve successful outcomes at their annual meeting and provide robust year-round support to develop best practices around governance, compensation, sustainability, as well as broader business relationships with their institutional and retail shareholders. So as the head of sustainability advisory, I really focus on supporting companies on developing their sustainability strategies and ESG related reporting. Of course, we're seeing the landscape change pretty significantly in 2024. So while we're still very much focused on guiding companies through that, based on the evolving expectations of their investors, we're also looking more and more toward how companies can navigate the evolving regulatory landscape when it comes to disclosure.
So focusing in this new regulatory regime, which I guess we'd be having a very different conversation potentially if this were December of 2024, but looking ahead at what's taking shape, you help companies along the whole journey, as it's often called, in building or carrying forward an ESG program. First step, or one of the first steps in that, is the materiality assessment. Are there any key takeaways or new learnings or new challenges or new, you fill in the blank there, that you think companies should be most mindful of or most prepared for as this new regime takes shape?
Yeah, so just taking a step back, as you mentioned, there's a really clear ESG journey or sustainability journey that a lot of companies need to go on. And at Alliance Advisors, we have a 4-phase approach that we use to guide companies along that journey. That is assess, apply, disclose, and engage. And we really believe that this is the framework that companies should follow within a given year, as well as year over year, to continue developing their sustainability programs in line with evolving expectations, both from a regulatory perspective and a stakeholder perspective. And a materiality assessment plays a really significant piece across that spectrum. So from a regulatory perspective, of course, we're seeing materiality assessments become a requirement under the Corporate Sustainability Reporting Directive, or CSRD regulations in the EU, which are going to require companies to conduct this analysis in order to determine the material information, sustainability risks and opportunities that they will be reporting on year over year. So not only is a materiality assessment becoming increasingly important from that compliance standpoint for EU companies, as well as a plethora of US companies that have operations abroad, but materiality assessments are also really valuable in that engage context, because it's a tool for companies to be able to actively engage with a wide range of key stakeholders to better understand what their priorities are, what their perspectives are, to inform strategy development, and then, of course, reporting. So the concept of double materiality, looking at that not only through the lens of what might impact the company financially, but also how is the company impacting people and the planet and communities that it operates within, is a really significant evolution going into 2024. And we're seeing a lot of companies revamp the way that they've historically done materiality assessments to better align with all of those expectations.
Let's move down the ESG program process to disclosure. The core of much of the regulations in California, Europe, pending regulations from the SEC are focused on disclosure. What type of growth or new challenges are you seeing with clients in meeting these new disclosure requirements as they move from the voluntary paradigm to the new regulatory regime?
Well, first, I would definitely highlight that I think that shift, while extremely challenging for companies in many ways, is ultimately really valuable and is sending a super important signal to all stakeholders across the market that sustainability is not something that is ancillary to doing business. It really is a core part of creating long-term value and being successful as a company to effectively manage risks and opportunities. So while there definitely are a few challenges companies are facing process-wise to address those changing regulations and the move from voluntary to mandatory, I think that in the long run, there's a lot of value to it. The main challenge is what I just mentioned, process. Companies may have had processes in the past that were, again, not formal, not always integrated to the board level, especially for smaller and mid-cap companies. Of course, we know a lot of larger companies have been doing this really well for many years. But I think building those processes and then also conducting their activities or their data collection in a way that's prepared for the inevitable assurance of this data as we move toward the requirements is a bit challenging, some growing pains there to understand how to best do that. And I'm not sure that the guidance is really fully out there yet with all the answers. So it's a building the plane as we go, as I think everybody in the sustainability industry often says with these instances.
Or moving back to the engagement theme you'd mentioned, in the world I focus on here in the sustainable finance and ESG team, working with institutional investors, engagement, stewardship are touted as the kind of primary or sharpest tool that can be used to kind of not prod necessarily, but invite companies to meet the emissions goals that they've set, net zero goals that they've set, so that the investors themselves can also meet their own targets. So for clients you're working with in the year ahead, preparing for sustainability related shareholder engagements, is there anything you'd want to highlight that you think is worth sharing here?
I'd say that now more than ever, engagement is extraordinarily important. When we're talking about shareholders in particular, we always advise companies to not leave that until before your annual meeting, because the ability to affect change or address your investors' concerns is limited when you come calling right before your annual meeting. There's no room to fix any concerns. So off-season engagement and ensuring that you are engaging with your shareholders, and this goes for all stakeholders throughout the year, is crucial and is a key input for then developing your ongoing sustainability and corporate governance strategy or improvement. So that's certainly one of the key recommendations that we always provide to companies.
Well, Emmanuelle, I look forward to helping build this plane as we fly it through 2024, and much sooner than that, seeing you in the desert for GreenBiz 24 next month. And really appreciate you taking the time to join us here in the GreenBiz studio.
Yeah, absolutely. Thanks so much again.
Thank you. You just heard from Emmanuelle Palikuca, Managing Director and Head of Sustainability Advisory at Alliance Advisors.